Is this bull run for the Hang Seng and China Enterprises Index justified, in your opinion?
Well, certainly after the low, which is pricing in, I would say, a total disaster between China and the US, I think the market's starting to realize that they're going to work out a deal, and it's likely to get back to status quo before. So a lot of that uncertainty, I think, is starting to wane, and markets are starting to price in that this won't be bad. It'll be a lot of political saber rattling, but not a lot more than that.
So the uncertainty being unwound, and the markets are reflecting that. But is that enough, Jason? Is this move to bull market territory really built on firm foundations, or is it just really sentiment driven and therefore a little bit fragile? And how long, in your opinion, does this last?
Now, of course, part of it is the sentiment going from quite negative at the start of the trade war to now realizing this is probably just a distraction. But there is a fundamental aspect to it, right? I mean, Chinese stocks in Hong Kong are trading at fairly low valuation multiple versus their comparable in the US. So you're talking about Baba, you're talking about Tencent, right? And so these are great companies that are just really waiting for a catalyst for their valuation expansion to kick back in. So I think there is strong fundamental, but the catalyst, of course, has to be a positive sentiment.
Right, it's interesting what you said about valuations. Jason, just give us a bit more colour on how you see these multiples evolving. And are there any names or sectors that are looking perhaps overextended, or do they represent reasonable valuations at this stage?
Again, you always want to look at comparables, right? It's either buying sort of tech exposure in the US, or you can start to look for tech exposure, tech opportunities in Hong Kong, especially given that China, from an AI perspective, is a competitor, not just a imitator that's generation behind. And so from that valuation comparison perspective, I think some of these Hong Kong names are particularly interesting. And you think of Baba, right? It's both a bellwether for kind of China, for Hang Seng, but of course it is also a major player in the AI race as well. And so I would tend to go with what's bellwether for someone to say, hey, maybe I want to diversify away from the US, take some profit there, and rotate to where there might be sort of equal opportunity but at a lower valuation.
Interesting. So you want to be owner of the bellwethers, including names like Baba. Jason, so strategically at a sector level, give us a bit more colour on that. How are you participating in this rally?
Well, it's absolutely from a sector perspective in the tech sector. And I got to say, right, the AI, some people call it a bubble, but, it is, I think, a bubble, if you can call it one, that has legs, that'll continue to run. There's just so much money chasing it, and the opportunity, the imagination is there. And so for sure, it's the tech sector for us, and tech sector that touches this AI theme.
That's interesting perspective, Jason. And I discovered this when I was in Beijing covering the two sessions. It's almost as if the greater China markets, to a large extent, are almost agnostic about what happens externally with the tariff and the trade environment, which begs the question, how much or how transformative, and was DeepSeek an inflection point, to your point about the tech sector, and how important was this in terms of confidence and conviction towards Alibaba and the rest of the ecosystem?
It absolutely is, Sri. I would say prior to the announcement regarding DeepSeek, I would say the Chinese sentiment was incredibly negative, right? The trade wars had started, and of course, prior to that, there were just sort of policy bungling that also caused the market to lose confidence. And of course, once you have trade war, I think the Chinese investors were thinking, right, we're just going to be beaten down. We're going to accept whatever sort of American tariffs and negative policies thrown at China. But with DeepSeek, the psychology changes, right? Now people are willing to believe that China, even with American sanction, could compete. It's not just an imitator that's generations behind. It might actually leapfrog, right? And so that really foundationally changes psychology from one who is an imitator, who's behind, to one who could compete. And that has a meaningful impact on investor psychology, but also the valuation multiple implied, right? From being an imitator to a really innovator.
Jason, don't get me wrong, I don't want to jinx it, and I like a good rally just as much as the next person, but what could lead to a correction, and what then should be on our shopping list if you are a dip buyer in the event of a correction?
Yeah, so I'm absolutely a dip buyer because, again, for me, there are a lot of sort of negative sentiments that's just getting peeled away, and so it's just a matter of, look, people may get disappointed with some bad trade talks out there, but the fundamental, this recovering sentiment, this recovering belief that China could compete and that in a trade war, China has a bargaining chip to actually get to an outcome that is actually favorable. So I am a dip buyer, but things that could cause pullbacks, I would say, of course, negotiating with President Trump is always going to be a roller coaster, right? It could be, we got a deal, we love China, to, hey, this is unacceptable, and the U.S. is going to turn on a nuclear option and tariffs go back up to 100%. And that, of course, is going to scare markets, even if you do believe it all get worked out. So I would say, there's some uncertainty, but it's largely, I would say, part of the negotiation ploy.